Okay, so for this second video in the TurboTax 2022 playlist, we're going to be going over how to complete Schedule C for self-employed earnings. So our taxpayer here, John Q. Taxpayer, Florida resident. In the previous video, we covered how to input his information on his wages, some interest income, and so now we're going to move on to, well, what if John has a side business, a side hustle, and earns some additional income there? So the pieces that we're going to cover in this video, so we are going to cover broadly the rules covering what's a trade or business, what's a hobby, or is it just personal activity. This is very important because it will determine how we ultimately report the income and expense. Then we'll go through the Schedule C, the profit and loss from the business activities, and Schedules 1, Schedule SC, and then Schedule 2 as well will be included in there for the self-employment taxes, right? That's part of Schedule SC, really. And then we'll also cover the 1099K, 1099 miscellaneous, and some of the 1099 NEC reporting issues. And once we get through into the tax software, you'll see what I mean by that, because you have to very carefully review these items to determine how they're reported appropriately in TurboTax. Okay, so if we jump back to the software here, so we've already gone through John's personal information, and we have inputted the information on his wages, so his W-2 wages and some interest income from a bank account he had. And then we also addressed how to input the interest expense on his student loans. So now let's look at what John's activities are from his side hustle business, right? So just a quick recap of the fact pattern that we had before. So he's a sales agent in Florida. He had a W-2 for his wages from his full-time job. He has a 1099 INT from the bank for interest income. And then he also had the 1098E for his student loan interest, right? So all that's already been inputted. Now, John also runs a part-time e-commerce store, and he sells electronic products. Now, it's obviously not his full-time job, so he doesn't have a lot of activity, but here are the numbers he has for the year, right? So his gross sales revenue was $3,050. The total cost of his inventory was $2,300, so that's the amount that he spent to buy the electronics, and then he ultimately resold it for the $3,050. So his gross profit margin, right? Gross profit margin is sales minus cost of goods is $750. Okay. Now, in addition to this, he also had office expenses of $100, and he had some advertising costs of $50. So maybe he ran some Google AdWords just to market his website a little bit. He started the business in March 2022, and he does all the work himself, right? So that's important, right? So he doesn't hire any outside contractors. He has no employees. And so that also gets factored into how we complete the Schedule C. Now, he received a 1099K for $3,050 in gross payment card transactions, so that reconciles with his sales revenue. And he has determined that he's going to be treating the activity as an ordinary trade or business, right? And so I'll put a link below to another video where I've covered this issue in more depth, but broadly speaking, when you have an activity like this, you have to assess whether it's an active trade or business, is it a hobby, or are the sales proceeds from whatever it is you're doing just purely personal in nature? And the reason why this is important is because ordinary trade or business income is reported on Schedule C, right? It's self-employed earnings, versus hobby activities are not on Schedule C, right? They get reported differently on Schedules 1 and Schedules 2. The other issue here is when you have an ordinary trade or business, you can deduct expenses in excess of your revenue, right? So you could have losses. With hobby income, that's not the case, right? You can't deduct expenses in excess of your hobby revenues, okay? And then if they were purely personal sales in nature, then it wouldn't be reported in any of these fashions. It's also completely different, right? So very, very important to assess, whether you have an active trade or business or not. Is it a hobby or not? And that'll drive the reporting. Okay, so let's move on to the actual return and start entering some of this information. So in the wages and income section, we have the W-2 already entered. So now let's go into the self-employment income and expenses section. So if we open this up, we'll start to populate, go through the Q&A, yes or no questions, and there'll be fields for us to enter, right? So we did have self-employed income during the year, right? So we're going to answer yes. And the type of business, we're going to just put e-commerce, right? So we're running an e-commerce store, so that's sufficient. Now it's going to try to point us in a direction to help us complete this, if we can kind of narrow down what type of industry we're in. So based on these selections, none of these apply, so we'll just select that. And then the next question here is also a very good one, and I touched on this when we were looking at the slides, right? Is it a main source of income? It's a side job? Is it a business, right? All of this is important. So, you could, in his case, remember, we're ultimately trying to get this on Schedule C. So you could treat it as a business or a side job, right? Either of those would be fine. So let's go with it's a business, and we'll see how it directs us here. So, our business doesn't have a separate entity or name, right? We're just a sole proprietorship. So in this case, it's really not named. We use this home address, yes. So we do everything from our home. And we started it in 2022. And we started, remember, on March 1st, 2022. Did you pay any employees? No, right? So we didn't have any employees, so we don't have to do any W-2s. Did we make any payments to contractors in excess of 600? So remember, if you make payments in excess of 600 in connection with your business, you might have to do a 1099 NEC or a 1099 miscellaneous. In our case, remember, John did all the work himself, so he didn't make any of these payments. We do not have our own EIN, right? So again, this is just a sole proprietorship. Sole proprietorships are unincorporated businesses. So we don't have a separate business entity name or EIN, right? We're just doing everything through John's name. So no EIN. Do any of these less common situations apply? We did not. Okay, sorry. So I didn't actively participate in the operation. We did, right? So we're not checking that box. Now, why are they asking us that? They're asking us this because of the passive activity rules. So if you have income coming from a business, but you don't actively participate in the business, you're likely subject to the passive activity loss limits, which means that if you have losses from the business, those are only offset against other passive activity gains, right? You can't use them against your active income. In our case, we did actively participate, so I'm not going to check that, nor am I going to check this one, right? So none of these apply given our fact pattern. Okay, so now we're moving on to the next screen. It's asking us just a summary here of all of our information on the business. No employees, no 1099s, actively participated. Yeah, so now it's asking us, we need to confirm information down here below, right? So cash method versus accrual method, right? In our case, we are just a cash method, cash basis taxpayer, so we can leave that as is. But if you want to change it, you can jump in here and change it, right? So if you decide that, well, I want to use the accrual method, or I have to, right? In certain cases, depending on your gross revenue, you might have to use the accrual method, but in our case, we're just going to use the cash. And so it also asks us here, confirm assets on a reservation or in a disaster area. In our case, no. So select all that apply. Business assets that are in qualified Indian reservation property, no. No disaster areas. Acquired assets after 07. Acquired assets after 05. So again, just carefully read through all the questions. Make sure none of them apply. If they do apply or you're unsure, they have this nice Learn More section here where they'll show you some more guidance that might help you, better answer the question. Okay, so everything looks good here. And now it does ask us here, okay, so if we got paid through Square, we can import our transaction details, right? In our case, we didn't. So we're just going to skip all of this. We don't need to import anything. And so now we should start to be asked to enter some actual financial information here, right? So, okay, the first step is enter the income. So income information of the company, common income, less common income. So for self-employed persons or sole proprietors, yeah, these certainly are the most common ones that you'll see, right? So we did get a 1099-K because we had a payment processor process our sales receipts. 1099 NEC, non-employee comp. So that means if you're an individual and you have, let's say, a subcontract or contract labor position with another company, you might get an NEC. Remember, this used to be just 1099 miscellaneous, and then they decided to create a whole separate one for non-employee comp, and they added the 1099 NEC. In our case, we've got a Form 1099-K, right? And so let's say, we've got the 1099-K from PayPal. Obviously, this is not their real EIN. And remember, the gross payments that we receive, so the gross sales revenue and the same amount reported on the 1099-K was $3,050. Okay, so if we put $3,050, and these numbers should match up with your 1099-K. So if you've got your 1099-K in front of you, just input the information within the screen as it matches up with the 1099-K. No federal withholding and no state information in these boxes. So go ahead and continue. Did you have any more self-employed income for this business, right? So they're asking us, okay, if you sold product and didn't get a 1099-K to report that revenue, go ahead and enter it here, right? In our case, everything John sold through his website went through that payment processor, and that's everything he sold. So he doesn't have any other income to report on his Schedule C, okay? All right, so now the income is done, right? And so if we quickly just look at the return to see how it is building out so far, go to the Tools section here at the bottom, Tax Tools, Print Center, and then Print, Save, or Preview. This will give us an opportunity to preview it on screen so we can see how the return has changed from before, right? So here's the return, TurboTax. John, we see his identifying information up here, name, first and last, taxpayer ID. In the previous video, we've already inputted his W-2 wages and his interest income. So what we've seen change here really is, firstly, we've got a Schedule C that's been added. So I'm going to go to that first, and then I'll go back up to the other ones. So we can see here, Schedule C, right? We've got the name of the proprietor, so that's the sole proprietor, the business owner. The type of business, street address of the business, and then information on the accounting method, cash basis, materially participated during the year, and he started the business during this year, right? Very important to get these right because, again, remember, in question G, if you didn't materially participate in the business, then if you have a loss for this activity, you're arguably not going to be able to deduct it. Okay, but again, it's very, very important to make sure you accurately answer this question because the IRS loves to audit passive activity loss issues that taxpayers have on their return. So very, very important. And then we can see here on line 1, right, there's our gross receipts or sales. So that's the 3,050 number. That reconciles with the 1099-K. It doesn't necessarily have to, right? Very often, taxpayers will have a business and they'll get income from many sources. They'll have a 1099-K that shows a portion, but then they have Zelle transfers. That's another piece, or direct wires. So when you report your income, make sure you're reporting your gross revenue, right? So the total amount of income, even if you didn't get a 1099-K for those amounts, okay? Very important. And then in the expenses section here, you can see everything is 0 because we haven't entered our expenses yet. So we'll go ahead, we'll go back and do that, and then we'll cover the other schedules that were populated here. So let's go back into the wages and income, go into the review section, and we'll try to get back into the part where we get to input our expenses. So all the income is done. I probably went the long way about getting back in here. Oh, there we go. Okay, so let's find all the expenses for your e-commerce work. So they've already kind of given us some hints as to the various categories that we might get. In our fact pattern here, because again, we're trying to keep it real simple. We just have 2 expenses that we were incurred, right? So we had office expenses of $100. We had advertising costs of 50. Sorry, 3 expenses, and then our inventory of 2,300. All right. So we've got to get these 3 pieces in there to get to our net profit for the business. So if we go in here, let's get started and make sure that it prompts us for all of the costs that we actually did incur. So startup costs, vehicle costs, home office costs, communications, assets, supplies, advertising, meals, legal and professional, business travel, office, and 100% meals. Okay, so a lot of stuff in here. All right, so let's start diving in here and see where we can find the expenses to get them appropriately entered on the Schedule C. So we'll look at supplies. We did have advertising. We did have no travel. We had office expenses. So let's look at these 3. Let's see what else is in here. Business insurance, repairs and maintenance, utilities, credit card loan, and other interests. Oh, there's another page here. Commissions, equipment rental, building or land rental, long-time insurance. So you can see they've got quite a few options here. It's just really important. And okay, there we go. There's our inventory, right? So remember, so we've got our office expenses, our advertising. I'm going to uncheck supplies because we didn't really have supplies. Remember, we had advertising costs, we had some office expense, and then we had the inventory costs. So we've got these 3 selected. Now, obviously, as you go through this, if you find that you select one and you don't see it on the next screen, then you can just go back, right? You go back and forth. Frankly, it is a lot of trial and error, particularly if you're using a new piece of software, but hopefully we should get to the end of this and it'll work just fine. Okay, so it's nice and loading here. Okay, so expenses we want to check. Do we have startup costs? Now, if you set up a separate legal entity, you'll very likely have startup costs. In our case, we don't. We didn't register a DBA. We don't have a legal entity. We didn't pay for a lawyer or anything like that, so we don't have any startup costs. We don't use the vehicle for work. Do you use your home office for work? Now, in our case, we do. However, for this purpose, I'm going to avoid the home office deduction because I think it's going to make the sample fact pattern a bit more complicated. I'll do another home office type video where I cover that just because that can get a little tricky, right? There's a lot of rules around using your home office, and frankly, a lot of taxpayers claim this deduction when they shouldn't be, and they get in trouble with the IRS. So for this purpose, I'm just going to skip it, and then we'll do a separate tutorial on that one. Okay, so now it's asking us, let's start looking at some of the expenses. So the advertising, jump into this one here. And what was okay, so we had, our advertising cost was $50, right? So let's say that was $50 worth of Google ads, right? So you can just call it advertising, all right? I mean, that's fine, or you can be more precise. But in our case, we're just going to leave it like that. And we'll go ahead and hit continue. We'll go ahead and start the office expense section. So we had office expenses, $100. And then we're getting into our inventory, right? So inventory, remember our total inventory purchases was, what was it, $2,300. Now, for purposes of this example too, we're assuming that our inventory on hand at the end of the year was 0. Basically, what we're saying is everything we bought during the year we sold, right? And because John's activity is quite minimal, that's not unusual, right? Normally, that'd be the case. If you're a much larger e-commerce business, then that could be much greater. All right, so I have some inventory to report. Did you use the cost method? Yes, right. So our cost method simply means that whatever we paid for it is the value of the inventory. We're not using another method to revalue it. We're just keeping it very simple. So I use different methods to value inventory at the beginning and end of 2022. No. All right, so the beginning value of the inventory was 0. At the end of the year, it was 0, right? So what we're saying is, look, we started this business during the year, so we're going to have 0 at the start of the year. That's fine. And then at the end of the year, it's asking us, okay, if we have inventory on hand at the end of the year, whatever the cost basis is, the value is, go ahead and enter that number. In our case, because we sold everything, we're just going to leave it as 0, right? Go ahead and hit continue. Now, this is where we add what we actually purchased or incurred during the year. So in our case, we purchased $2,300 worth of product. So we can go ahead and enter $2,300. We didn't use any of it for personal use. We don't have any additional labor costs, right? We have no employees. We don't have any contractors that were inventorying the costs. And we had no materials or supplies attributed to these purchases, no other costs, so we're going to leave this as is. Go ahead and hit continue. So here's the gross profit breakdown for the business. Total sales, $3,050. Cost of goods is $2,300. And there's our gross profit margin, right? So that was the computation that John did here, right? He had $3,050 in revenue minus cost of goods $2,300, so his gross profit margin was $750. Okay, so it's starting to make sense here. Go ahead and hit continue. Here's a summary of the information, right? So we've got our advertising totals, office expense totals. There's our inventory. Income being reported, we did get a 1099K from PayPal, so that's fine. Uncommon situations, carryovers, limitations, at-risk info. Let's go ahead and I'll walk through this just to talk about some of these issues, but they're probably not going to apply, but important just to be thorough here, right? So check all the situations that apply to your business. I have unused Section 179 expenses from 2021. Okay, very important. If this wasn't a new business and you took 179 expense in a prior year, 179 expenses can be capped depending on your revenue, right? So if you don't have enough net profit to eat up all the 179 expense, then it's very likely that a portion wasn't used and it's rolled forward. So what they're asking us here is, look, if we took 179 expense last year, let's say we wrote off a property for $100,000, but we couldn't deduct all of it, we might have a carryover. Passive activity loss carryovers, not going to apply here because remember, this is not a passive activity at all, right? John materially participates in the business, so nothing to do there. No at-risk losses. During 2022, I disposed of non-depreciable assets, right? In this case, no, right? We didn't have any non-depreciable assets that were sold during the period. Money invested in this business that I'm not at risk of losing doesn't apply here, so none of the above. All right, so now the ending summary here, nothing left to like start or look at, so we'll go ahead and hit I'm done, and we'll see what, okay. Nice, you've lowered your taxable income. Right, so income for the work, again, that's our gross profit margin. I don't like the way they do this. This is kind of misleading. I mean, it's true, right? But, you know, what they're saying here is, look, our gross profit margin was $750, but because we took business expenses, which obviously you're entitled to do, now our net taxable income or net income from the business is $600. So the $600 minus the deductible part of the employee or employer portion will be kind of what our net taxable income is from self-employment. So let's go ahead and continue through. How much of the e-commerce work took place within the United States? All of it. Was any of your e-commerce work for a former employer? No, right? So all of this was just products sold to third-party customers. So none of this work was for a former employer. Do you have any deductions for this e-commerce business that you'll claim elsewhere? No, right? So it's asking here, this is not common, but if you had deductions that you'll claim outside of self-employed income and deductions, these deductions will reduce your qualified income for the qualified business income deduction. Yeah, an example of includes interest on loans taken out for the business. Yeah, so again, we don't have any interest expense, no loans, no credit card debts or anything like that. Okay, so now let's double check everything, right? So run my free check. Let's see what they give us here. They give us a nice audit assessment. Risk is low. I guess that's good. Do you have another line of self-employed work in 2022? So if you have other self-employed ventures that are not attributed to this e-commerce business that John had, so let's say he did like marketing consulting, he might need to add a separate Schedule C, right? So you want a separate Schedule C for each line of business, right? You want to keep those separate, keep the expenses separate. In our case, no. Okay. Yeah, you can increase your refund and reduce your tax by checking more expenses, right? So yeah, I guess they're asking you, okay, go back and do another deep dive. See if there are any other expenses that you're missing because you want to make sure you're capturing all expenses that you are legally allowed to deduct, right? Okay, so here's the new details. So we've got the self-employed income and expense entered for this e-commerce business. Now let's check the print center and see how this has updated the return. So if I go to the print center, print, save, or view, go back into the return. All right, let me zoom in a bit here so we can see. So we've got cover pages here, John Q. Taxpayer. Remember, nothing up here has changed, right? His wages from his sales job, still $41K, interest of $12. So the items that are going to change now, let's start with the Schedule C. Okay, so Schedule C, we can see his profit or loss from the business. There's his gross receipt number. Remember, that remained unchanged, $3,050. But what's changed from the prior time we looked at this, we've got a cost of goods number here. That's the $2,300 for cost of goods for the inventory sold. Right, so there's our gross profit margin. And we can see here on lines 8 and 18, we've got the advertising expenses of $50 and $100 for office expenses. Net or tentative profit or loss is the $600. Okay. The part 3, cost of goods, is populated now, right? So inventory was 0, ending inventory was 0, our purchases were $2,300. So when you reconcile this, we determine that the cost of goods sold is $2,300. So in our case, because inventory at the start of the year and the end of the year was both 0, what that means is all of our purchases were sold during the year, right? So, we've got, it makes the accounting a little easier for us. Part 4 and Part 5 are blank. We didn't use the vehicle. In Part 5, other expenses, this is the carryover, right, that would otherwise not be reported up in a prefabbed line item. So, in other words, down here on line 27A, right, so line 27A is where you report the totals of here. So, if you have expenses from categories that just don't fit one of these descriptions up here, go ahead and list them all down here, the amounts, and then the total on line 48, go ahead and transfer this up here to line 27A. Okay? All right, so now after the Schedule C, what else has changed? Well, the first thing is we've got a self-employment tax computation. So Schedule SE is going to populate, and Schedule SE, we've determined that $600 is our net profit or loss from that trade or business, right, the e-commerce store. And then what the computation is doing here is it is giving you a tax deduction for the employer portion of the self-employment tax, right? So remember, when you're self-employed, you have to cover both the employer and employee portions. And so what this does is it tries to give you a little bit of a tax benefit for paying both pieces. And so that's how the worksheet figures out the amount of self-employment tax that you owe and the portion that is deductible. All right. So once the Schedule C and SC are completed, these numbers are ultimately reported up here on Schedules 1 and 2. So Schedules 1 is the additional income amount. So we already had a Schedule 1 and 2 on here because Schedule 1 is where we reported in Part 2 the student loan interest deduction for John, right? So there's that $2,500. But on Schedule 1, we also need to include the amount of business income or loss that he got, right? So $600 in business income or loss. That was the net profit before factoring in the self-employment tax. So that number is reported there. And then in Part 2, we get a deduction for the deductible part of the self-employment tax, right? And that's where the Schedule SE must be included, all right? Then Schedule 2 is added for the self-employment taxes, right? So again, coming from SE, we need to report the amount of self-employment tax that we owe with the return. So Schedule 2, additional taxes. You could have a variety of additional taxes on here. Obviously, it's quite a long list. But in our case, the only item we have reported right now is the $85 for the self-employment tax. Okay? And then ultimately, obviously, everything will carry on or carry over up here, right? We'll have additional changes to the total amount of adjusted gross income for John, right? And then the additional amount of the self-employment taxes owed, right, coming from Schedule 2, the $85. His net federal tax liability, and then now his adjusted refund amount. So I hope that was helpful. Quick run through the Schedule C. If you have any questions, obviously feel free to comment below, and please continue on in the playlist in the next video and see what we cover in the next installment of how to use this TurboTax platform. All right, thanks so much and take care, and I look forward to seeing you again soon. Bye.